Okay, everybody, here we go. It's me, Gregory Mannarino. Wednesday, May 5th, 2024, pre-market report. Let's talk about this CPI number that just came in, Consumer Price Index. As you and I expected, I mean, we called this out before it happened as usual. We got a Goldilocks number, and the market is loving this. The 10-year yield is cratering. The dollar is dropping. Stock futures are higher pretty much across the board. So here we go. This is the headline here. So April CPI inflation still rising. Inflation is still rising, but less than forecast. The number was 0.4. Well, it came in slightly lower. So this is as we expected. That was the number we used right here. Goldilocks. Of course, this is fake. We all know this is fake. Inflation continues to outpace everything else. Food inflation more than anything right now. People can't get by. People are struggling. The economy is cratering. As a matter of fact, on the economic front, here's some economic news from today. Mortgage demand for homeowners drops. Look, people can't get by anymore. It's become a slave nation. People can't buy homes. A lot of you out here follow my friend Chuck Barone. Go ask Chuck. He'll tell you about this whole situation. He's a mortgage broker. He'll tell you the situation. It is absolutely dire. So anyway, look, does this surprise you? I don't think so. Because here again, a clear example of you and I calling out what would happen before it does, because it's fake. We know what they're going to do. They're going to fake the numbers. They're going to fist feed us garbage, nonsense, and dog excrement. But this is the Goldilocks space, and the market's loving it. Who's buying all the debt? Let's see. On the back of all this, remember just like 2 days ago, you and I were on sub MMRI 290 watch. Look where we are this morning on the back of this. Do you know what it would take to push this number down? Massive, epic, freaking astronomical amounts of debt buying. Who's buying all the debt? Who's buying all the debt, people? I'm going to give you one guess. It's the Fed. They're buying all the debt here. And of course, this is currency negative. You see the dollar dropping here on a relative strength basis. Look at the Dixie. It's an incredible situation here. But as we expected, bam, there you go as well. Now, it's not just, not only do we have stock futures higher across the board, 10-year yield dropping like a rock, dollar falling off of a cliff. You got gold and silver catching a nice bid this morning. You got cryptocurrencies catching a nice bid this morning. Crude oil's flat right now, not doing too much, but that's definitely going to change. Energy prices, look, everything that is priced in dollars here, again, dollar devaluation, currency devaluation, purchasing power losses, this is only going to accelerate moving forward no matter who they choose to put behind the Resolute desk. So you can imagine where this is all going to go moving forward. Do you keep in mind as well what we spoke about just yesterday, and I showed you a chart? The Federal Reserve, just since February 26th of this year, all right, we're at May 15th, has inflated the money supply at least, because that was lagging, $418 billion, almost $500 billion, and they're not done inflating here. It's an insane situation here, but what else would you expect? Now we got a lovely warning from our friend Jamie Dimon. He's urging the United States to deal with its deficit sooner. Look, it's not going to stop, and Jamie Dimon knows it's not going to stop. Debts and deficits continue to balloon out of control as this situation becomes more and more dire here. So that's what's going on today. Imagine my shock. Imagine your shock. Inflation continues to rise. Oh no! Oh, but it's slightly less than forecast. Now remember these forecasts. These forecasts, it's laughable, are by so-called economists who are polled. They've been wrong, even obviously with this one, 100% of the time. Meanwhile, you and I, how is it do you believe? Okay, look, I'd like to think that we're smarter than most people, and maybe that's true, maybe it's not true, I don't know. But Federal Reserve has been wrong 100% of the time. They haven't been right once with regard to their projections, with regard to inflation. And what did Powell tell us? He has no confidence in the Fed's projection. This is what he said, came right out of his mouth with regard to inflation. Although we're supposed to believe that according to the Fed's newest projection, prices are going to come down in 2025. No. Through the end of this year and into 2025. Do you believe that's true? Meanwhile, the Fed's inflating on an epic scale, debts and deficits hyper-ballooning, $418 billion added to the money supply since February 26. Make it up. Make any of this stuff up. Can't do it. It's impossible to do. But our economy is strong, and you can tell because mortgage demand continues to fall. Oh, yeah, absolutely. And major corporations, they continue to lay people off by the tens of thousands. That's how strong our economy is. Keep in mind, and look this up for yourselves, right up until the last days of World War II, the German people believed they were winning the war. They believed they were winning because that was the propaganda being fist-fed to the people, well, by their so-called loving, caring leaders like we have here. Our loving, caring leaders couldn't give a damn about you or me. You understand? All they're concerned about is making sure that they and their families are okay. They understand what's happening here. The economy in free fall around the world. Central banks fulfilling their end game. They're working together right now to destroy the economy, to bring us to our knees. To issue in a new system, you all know that. We know what the system is, fully tokenized. We've discussed it. I've written papers about this. You know where we're going. Everybody knows where we're going, at least that follows this blog. And if you're new here, let's get you up to speed. Start watching some of my older videos. You and me, they can't beat us, people, because I told you. We know who our enemy is. We know what they want from us. Understanding this gives us an insurmountable edge. If we realize that the Fed put is here. The Fed is buying the debt. The Fed is going to ensure that the market stays propped up right up to the presidential selection. Okay? That's what I've been telling you since I don't know how freaking long, and it looks like it's happening. Who's buying all the debt right now? Who's buying all the debt right freaking now as we're speaking? And to have enough firepower to push the MMRI here. I mean, I didn't expect this. I'm not going to lie to you. Greg Mannarino himself did not expect to see the MMRI drop like a rock as it is right now. I expected to see, maybe 287 or so, but this is absolutely incredible. People, I'm urging you to follow this. It's free. I made it free for all of you. I could have charged for this because this is an amazing tool to use, if you ask me, the Mannarino Market Risk Indicator, but I chose not to do that. I want you to have this information for free. Link in the description of this video. And if you haven't yet, be sure to subscribe to my newsletter. I put all kinds of stuff out there for you for free as well. It's not for me, it's for you. I'm trying my hardest to keep all of you ahead of the curve. Again, also link in the description of this video. So what do you guys and girls think about this Goldilocks CPI? We called it before it happened. Here it is. It's Goldilocks. The market's getting off on this right now. It's a beautiful thing. The Fed put is in place. They're going to prop up the market. That means cash is going to come out at places where it should be going into. And obviously going into the stock market here, further exacerbating the underlying issue. This is a hyper bubble of hyper bubbles that you can't even believe. And it's being engineered as well. What do we know about the Federal Reserve? They're a serial bubble blower. They blow these bubbles and they allow them to burst. Clear example, the Greenspan put, before it was called the Fed put, how he inflated the dot-com bubble and then pricked that bubble too when he started raising rates. You understand? All this stuff that we talk about is so simple. It is so easy. It comes down to cause and effect. Cause and effect. But what does that do for you and me? We're not going to change. We have been on the right path with regard to this whole thing for I don't know how freaking long, people. The market's going to stay propped up until it doesn't. And we have the ultimate tool to tell when that bubble is going to burst. And that is this, okay? The crash, as you all know, is not going to begin nor end in the stock market. It's going to begin and end in the debt market, which is the driver. So if you and I are watching the MMRI, which uses the debt market, the 10-year yields more specifically, and the dollar or unit of debt to gauge where risk is. I mean, it's just a no freaking brainer. I love it. All right, people. I think we're gonna call it here. I hope you got something out of this. I want to hear from you on all this. What about Jamie? Oh, he's urging. Be careful. Be careful. We got a problem. Homebuyers can't get mortgages because our economy is so strong, and of course we have the Goldilocks number. Imagine my shock. This guy here loves you a lot. This is a coping mechanism. If I don't do this, I'm going to end up in a freaking rubber room wearing a freaking straight jacket. All right. Love you a lot from the heart, people. I mean that. I will see all of you later, 4:05 p.m. Eastern for the live stream. Please join me there to help keep me sane, or I really am going to lose it here. Until we see each other again, take care of each other and take care of yourself too.